Hello, Pioneer. Did you know that the PiNetwork project is different from other projects that have existed? This project is unique. If you believe it, write in the comments, PiNetwork to the moon. Make sure you click the subscribe button to Pi News World. Oh, wow, Pioneer. Did you know that you have already become a millionaire because of PiNetwork? Don't forget to like and comment on this video. Pi Day, typically a moment of celebration for the PiNetwork community, took an unexpected turn this year as a massive sell-off caught many pioneers off guard. Instead of experiencing a long-awaited price surge, Pi's value dropped sharply, sending shockwaves throughout the ecosystem. The downturn raised serious concerns and sparked debates among community members, many of whom were expecting significant developments. What triggered this drastic sell-off? Was it purely market-driven, or were there deeper systemic issues at play? Here's a breakdown of the key factors that contributed to this unexpected decline and what it means for the future of Pi. KYC cleanup. Millions of accounts lost their Pi holdings. One of the biggest contributors to the sell-off was the Pi core team's KYC, or Know Your Customer cleanup process. In an effort to ensure a more secure and compliant ecosystem, millions of unverified accounts were removed or had their Pi holdings invalidated. This sudden loss of Pi from unverified accounts led to frustration among users who had spent years mining the cryptocurrency, only to see their balances disappear due to KYC issues. Many of these affected individuals, fearing further restrictions, rushed to sell their remaining Pi before facing additional hurdles. This selling pressure flooded the market with Pi, contributing to the price drop. However, the KYC verification process was a necessary step toward a more secure and trustworthy network. The Pi core team has long emphasized the importance of completing KYC, and this cleanup signals a move toward a more sustainable and compliant ecosystem. Leading up to Pi Day, speculation ran high. Many pioneers were anticipating major announcements, perhaps the long-awaited open mainnet launch, integration with major businesses, or listings on top-tier cryptocurrency exchanges. The community buzzed with excitement, with many believing that March 14, 2025 would be a defining moment for Pi's journey. However, the actual updates from the Pi core team did not meet these high expectations. Instead of a market-shaking revelation, the announcements were more technical and developmental in nature, focusing on continued progress rather than immediate breakthroughs. For those who had speculated on a drastic rise in Pi's value, this was a major letdown. Disappointed investors and traders quickly moved to sell their holdings, leading to a chain reaction of selling pressure that further drove prices down. While the absence of a major announcement was disappointing, it does not necessarily spell disaster. Pi's vision has always been about long-term development rather than short-term speculation. Despite its growing popularity and widespread mining adoption, Pi is still not openly traded on major cryptocurrency exchanges like Binance, Coinbase, or Kraken. This has left Pi in a closed-loop economy where its value is primarily determined by community-driven transactions rather than free-market exchange rates. The absence of a fully open and decentralized trading environment has created an atmosphere of uncertainty. Many crypto enthusiasts outside the Pi ecosystem remain skeptical about its future, as they cannot yet freely buy, sell, or trade Pi on global markets. Until Pi is listed on major exchanges and given full access to the open blockchain ecosystem, its price will continue to be volatile and largely dictated by internal market forces. Can Pi still recover? While the Pi Day sell-off was a setback, it does not necessarily mean the project is doomed. Pi still has significant potential provided the right steps are taken to strengthen its ecosystem. Key factors that could drive Pi's future growth include strengthening the ecosystem. The more businesses, merchants, and service providers that accept Pi as payment, the more valuable it becomes as a currency. Greater adoption will lead to increased demand and price stability. Real-world use cases could also be a game changer. If Pi gains traction in major sectors such as real estate, automotive sales, and digital services, it could establish itself as a serious contender in the crypto space. Another crucial element is having a clearer roadmap. The Pi core team needs to provide transparent communication and concrete timelines regarding the open mainnet launch, exchange listings, and partnerships. This would help build trust and attract long-term investors. Lastly, regulatory compliance is essential. Ensuring that Pi meets global financial regulations will be critical for mainstream adoption and integration with traditional financial institutions. Bullish or bearish? The future of Pi lies in the hands of its community. Despite the unexpected sell-off, PiNetwork remains one of the most active and engaged cryptocurrency communities in the world. While some investors may have been shaken by recent events, many long-term pioneers remain optimistic about Pi's future. The key question now is whether this price drop is simply a temporary correction before an upward surge, or if it reveals deeper issues that could hinder long-term growth. What do you think? Is this just a bump in the road, or has the PiNetwork reached a turning point? One thing is certain: the future of Pi will be shaped by the commitment, vision, and belief of its community.